Good morning, everybody. Happy Monday. Good morning. Hope you guys can all hear me okay. I know some of us are experiencing some weather this morning. Looking at the comments here, particularly in the Northeast, obviously. Snow, even down in Florida, it's cold. So I hope everyone is doing well. I should say that if you are getting a blizzard today, and I had a blizzard over the weekend, go out and enjoy it. Like do some skiing or some snowboarding. I can only tell you, if you enjoy, might as well make the best of it, right? I guess is my point. We've had a lot of snow as well, and some great powder to snowboard on. So, but that's just me. Anyway. Good morning. Again, happy Monday. It is the 23rd of February here this morning. We've got, looking at the calendar here, it's a short month, obviously, the month of February. We got just this week left in terms of trading. The last day of the month is Saturday. We've got 28 days in February this year. And we're going to come back next week. So 1 week from today, and we'll be in March. It's just February is just an incredibly fast, quick month. For obvious reasons. So what's going on this week? Well, I think this weekend, yes, Christian, thank you. Please, everyone, give us a thumbs up like on the videos, anything you watch, and subscribe to the channel, right? Because if you subscribe to the channel, what ends up happening is you'll be able to be updated in real time when we have analysis, new videos, podcasts, charts, ideas, whatever, all sorts of stuff. So that way you don't miss it. So do yourself a favor and subscribe to the channel. We are about to change the format. It's more of a visual format difference. We were supposed to do so last week. Hopefully we'll have it at some point this week. I don't want to keep making promises that it happens today or tomorrow, but I think we're getting really close. So hopefully over the next couple of days or so, we'll have a new format. It'll be more interactive looking. And anyway, so that's coming up soon. This week, we have an important week this week. And if you guys recall, for a couple of weeks now, I've been saying that the odds of an increase in volatility, and I'm not talking stock market crashes here, right? Just a bit more volatility, that the odds are certainly increasing. And this week, if you look at the calendar, I think undeniably on the corporate front, NVIDIA, that is that earnings report is gonna matter. There's no doubt about it. On Wednesday. So basically what we're looking for is Monday, Tuesday, Wednesday, and on Thursday, we will see markets react to NVIDIA. Now, what am I saying? Am I saying it's positive or negative? I'm not saying anything because I have no clue. If you're looking for definite answers on what the stocks can do after earnings, the best thing to do is go on Twitter or YouTube, follow a 25-year-old guy with no experience and no no money with just a big mouth. They will definitely tell you what's going to happen after earnings in NVIDIA. And obviously, as you guys can tell, I'm joking, right? So please just don't. Just don't, right? Just stay realistic, and let's see how the stock reacts. What I do want to point out, though, when it comes to NVIDIA is, and I had a couple of calls yesterday on Sunday because we have a Sunday call that we do with some of our hedge fund group and stuff like that. Hedge funds have Sunday research calls, by the way. And so what we found out is that there's just a big consensus, a big sort of cautious positioning ahead of this. And I say cautious, it's not necessarily people making bets, but in the hedge fund world, they're more just kind of waiting and seeing, because it is a big deal. And as we've talked about for so long, right, there's really no way for the index, the S&P or the NASDAQ, to go higher unless you see these Max 7 stocks push higher. And the reason these indices are flat year to date is because that's exactly what's happening. So in case you haven't heard me talk about this, let me just quickly reiterate it. I think it's worth, even if many of you have heard me talk about it, let me just reiterate it. So this is what I talk about, right? We call it the Great Rotation. It's already happening. I don't know if anyone realized that energy stocks, the sector, the XLE, is up 22.75% year to date. Year to date, right? Like, I don't think tech ever did that. This is what continues to play out. And actually, we're going to do a special session in our weekly research call. We call it our strategy session. I think it's on Wednesday this week. We're going to talk about what is all this? Like, why is this money moving into energy stocks and materials? We've talked about it for a year now. It's nothing new, right? But it's now accelerating. And so we're going to hold us another, and it's just beginning really in many ways. And so we're going to talk about it more this week. So if you want to know what that move is and how to position, or at least what our view is how to position, then join us in that call. Again, Christian's going to have the link for that here. Or I think we have the link. If not, we'll have it tomorrow for you guys. It's on Wednesday. Anyway, so energy stocks, right? So the point is, if you look at the S&P itself, it's flat on the year, and the only reason it's flat is because the financial is because tech stocks are down 2%, right? Otherwise, you can see 1, 2, 3, 4, 5, 6, 7. Yes, 7 of the 11 sectors of the S&P are up on the year. Couple of them are more or less flat. And again, the big one is tech. Tech is down, right? So it's mathematically more or less impossible for the S&P to go higher. This is our big theme as well, you guys know. The link is indeed up. Christian, do you have the link somewhere? I don't know if you could post it somewhere, because I don't think I see the link. Anyway, so we'll wait for that. But this is a big deal, right? And so when we come into this week, that's why NVIDIA earnings are even more important for the S&P and for most people's portfolio, because most people's portfolios are essentially benchmarked to the S&P. So where are we in NVIDIA, right? That's the question. So first of all, again, keep in mind NVIDIA has earnings this week on Wednesday, so the reaction will be on Thursday morning, right? So this is February 25th after market is when they report earnings. And so just a reminder, this is the S&P. We're kind of stuck. We have a tight and a somewhat bigger trading range, but they're all the same. So I'll give you some numbers around this in a minute, but on the indices, let's just quickly go back to NVIDIA just to finish off that conversation. So NVIDIA is again, this is the S&P, right? We've talked about this now for so long. I think still a lot of people don't really understand it. For the most part, this is the S&P right here. We had a bit of a breakout, fake out. Everyone got excited in October, and then we got back into a trading range. Now, is it possible that NVIDIA breaks out higher after earnings? You bet. It's possible. Do I have any idea where that's going to happen or not? I really don't. I have no clue. Right? And so we'll have to wait and see. What I can tell you is that the only way the S&P will break higher is essentially if NVIDIA breaks higher, which means that then tech stocks maybe will break higher as well when I say tech, I mean Mag 7, right? It's mathematically impossible for the S&P to go higher at this point meaningfully, right? It can go higher, but not much, maybe a couple percent a year, 3, 4 at the most. Most likely it'll be flat. Now, from a trend following perspective, and this is the long-term stuff, so if I owned NVIDIA, and I don't own NVIDIA as an individual bet, I'm sure I own it somewhere like in a broad diversified portfolio or something, but it is important that the stock remains in a bullish trend. So the green background color hasn't changed. The stock is very choppy because of this trading range. So I have no edge here to be short the stock. The only edge, if you will, I have is that it remains in a bullish trend. But going into earnings, I may choose to kind of maybe hedge it a little bit, or maybe cut the position in half, or sell a third or something. Not advice, but I'm just saying from a risk management perspective, right? So that's where we are. Now, as far as the indices are concerned, actually, before we get to the indices, let me just quickly show you. Christian did post that link just now. So let me show it to you. So what you can do, if you want to learn more about this, our move in, the rotation into energy stocks and everything else. Again, guys, the energy sector is up 22.75% year to date. You know what's not up 22.75%? Your portfolios. And I'm not talking to any individual person here, but the S&P, right? And it's because of exactly what we've been talking about now for so long. So if you want to learn more about the energy transition, we call it the AI boom, the second way to play the AI boom, and it's basically a lot of it has to do with energy, materials, and that kind of stuff. It's been an absolute home run, and I think everyone should know what's going on, and no one has exposure to that, by the way. Like, no one owns the energy sector. There's no energy analysts left, right? But if you want to join us in our discussion, it's going to take place Wednesday. So this Wednesday at 11 o'clock Eastern. Join us. It's free, obviously. but it'll be a great educational session this week. It's our weekly strategy session. We do something different every week, and that's this week's strategy session. Now, as far as the equities, when I say equities, I mean the S&P is concerned. First of all, just keep in mind that the tariff situation, the Supreme Court and all that stuff from Friday, no one seems to really care yet. So we'll see where that takes us. But here is kind of where we're at. What I'd like to point out to you, and the best way to show it to you is using the NASDAQ 100. This is just one of those things that I think here. So this is the 200-day moving average. It's just, this is a reference point exercise, right? It's not meant to be, this is like an amazing level. But I think it's important to understand. So we are, as we speak right now, before the market opens here Monday, the NASDAQ 100 is essentially, let's call it 4%. It's less. Let's call it 4% above the 200-period moving average, right? So, and this is the danger of using something like a 200-period moving average at this juncture as support, right? People always use these. This is why I'm so opposed to using simple moving averages or seasonality without perspective. There's a huge difference between using the 200-period moving average now as support versus, let's say, back in July of 2024, just as an example, right? Because in July 2024, and I'd love to get some feedback on this, folks, if this makes sense to you. Give me a quick yes or something into the chat box if this makes sense. Because back in July of 24, the index had to drop a long way to get to the 200-period moving average. But because the index, the NASDAQ, has done nothing since early October, like literally nothing, not a penny, it has allowed the moving average to move up to the price point. So if we get any pullback in the NASDAQ now, like anything at all, more than a couple percent, it's going to break below the 200 period, and then that 200-period moving average becomes the most useless thing you'll ever see, right? So this is an incredibly important point. I had to at a cocktail party on Saturday. I explained this to someone because we were kind of talking about these kind of levels and stuff. And so this is critically important to understand. A moving average is really just a representative of the past price, and it really depends where the current price is relative to that moving average to see whether it actually helps or is usable as a reference point. So if you're using simple linear moving average and call that analysis, or if you're using seasonality as your goat in the mountain to give you all the signals, I'm going to tell you at some point you will blow up. Because it's about putting it into perspective, right? Seasonality, by the way, is another one of those things, right? So seasonality can work very well, but it typically tends to work in bull markets. In bear markets, even when we have volatility, right? Like last April's seasonality charts, everyone had to flush them out because they were just useless. When any volatility comes, and the seasonality charts are just the most useless thing in the world. So. Anyway, so that's kind of what's going on this week. As far as the tariffs goes, again, I think everyone can read the news themselves. What I would point out is that if you look at the futures market this morning, it's really muted. I mean, the S&P futures are down less than or the NASDAQ futures are down less than 0.5%. So really just laughable, right? So I don't know. It seems to me that people aren't really taking the news very serious for whatever reason, and that's, I'm not here to judge on that. I'm just looking at the facts. The bond market is fairly muted. The dollar is a touch stronger. It's not. It's really not actually a touch weaker depending on which currency you look at. But it's not. There's nothing dramatic happening here today, and I think that's the main takeaway. So I would, for me, I'm gonna take it back to where we started here early this morning, and that's 15 minutes ago, and that's really NVIDIA earnings. I do think they matter. I think they matter for the index. I think they matter from an individual stock level perspective. And so that's really kind of my focal point here, is to see how we get through Wednesday. If it's amazing news and rainbows and puppy dogs, then yes, NVIDIA can certainly break higher. It remains in a bullish trend from a multi-quarter perspective, so that's unchanged. But I think any hiccup at all, the stock can easily easily, collapse by 20, 30% very, very quickly. It wouldn't be a problem at all for it to do that. I'm not forecasting that. I have no forecast in the stock. I'm waiting to see it. This is the highest concentration market cap stock ever. It's larger than like the German stock market and some other markets together. It's one stock, right? And it's a hell of a company, so let's be clear. But I'm not arguing against the fundamentals here. I've always just argued against the market cap concentration, that portfolio risk that creates portfolio risks. That's all I've ever argued about. Some people said, hey, Serge, against AI. I use AI probably every 5 minutes. I mean, I really do. So this is not an anti-AI. I think it's a market cap concentration question. And I think a lot of people, when a lot of these arguments, and this is a bit of a side note, a lot of the arguments that you hear about AI bubble and this and that. I just had a friend of mine who's sitting at a university just close to here talking about AI bubbles. It's not my case of an AI bubble. I suspect that it may be frothy. Calling it a bubble is a hindsight thing, by the way. But that's not my point. It's never been my point. My point has always been there's a huge difference between the fundamentals, the structural tailwinds, and then the actual or headwinds, and then the actual market cap concentration risk from a portfolio perspective. So anyway, that's all I got here, folks. We'll see you guys over in Trade Ops. Also, if you are a Vertical X Pro member, we're going to do a session together in about 40 minutes. So that's 10 o'clock Eastern time, 7 o'clock Pacific. Join us for that. We're going to go through how to use the Vertical X Pro indicator to find extremely overbought and oversold conditions in the market, be that on a day trading perspective or from a swing trading perspective. So we'll see you guys there. And at the latest, we'll see you back here tomorrow morning on Tuesday. Take care. And again, Wednesday's NVIDIA report, probably important.